You're watching HFO-TV, your partner in Pacific Northwest multifamily investing. HFO-TV is brought to you by Pacific Exteriors Northwest, apartment siding contractors with nearly 30 years of experience, providing exceptional quality and service to multifamily and residential owners. And by Gantry Incorporated, the nation's largest independent mortgage banking firm.
Welcome back to HFO-TV. I'm Greg Frick, partner at HFO Investment Real Estate. And today we have joining us Chris Page from J.D. Fulwiler Insurance. He's a commercial account executive, and we've known each other for years and been involved in the industry. So thanks, Chris, for coming to talk about something you probably didn't think people would want to talk about when you got in the business years ago.
You're right. Thanks for actually people wanting to listen.
Maybe give some background on J.D. Fulwiler and yourself and how long you guys have been in the industry. And again, our audience of just predominantly multifamily owners, and then we'll get into some of the things that are happening in the insurance realm.
Sure. J.D. Fulwiler started the mid-'80s by Jim Fulwiler.
Okay.
And he still has an office in the corner. His daughter, Tricia, is running it now.
Right.
I've been with J.D. Fulwiler for about 30 years. And it seems like any business you get in, I gravitated towards the multifamily for as far as insurance was. You write a few policies, and all of a sudden, that's what you want to write forever.
You end up going.
And
right.
That's what I do. I pay the light bill, and that did it. So,
right.
So I've been in the multifamily for about 30 some years. Have seen a lot, ups and downs. Have seen a lot with multifamily. So this is it's exciting times.
Does this, and we've had different talks about insurance. Yeah. Does this time remind you of any other time in your 30 years in terms of what? No, this is
so. I've never seen anything like this before. I've never even seen anything close.
Really?
To what's going on here.
Yeah, it's shocking.
It is.
Yes.
It is. In the early days, if your policy went up 10%, the next day. Or if a segment of the business went up 10%, the next day 10 new carriers would be in.
Pop in and
they'd say, "Hey, we'll go up 5%. Come with us." I mean, it was like that. And now you see 20, 30, 40% increases and no one's popping in.
Right. We'll tell people you get a 20% increase, you better grab it.
Do.
Grab it, take it, and start trying to figure out what you're going to do on your next renewal, and hopefully that's what you're keeping.
Hopefully it's less than 25 the next renewal, but it probably isn't going to be.
So what do you mean when somebody asks you? Because again, you do a lot of insurance for a lot of our clients, and what do you say when they ask what's going on? I mean, we get these calls, and we're like, call Chris and figure out. But what do you say to them when they call and say, "I just got my I got my renewal coming up. What do I do?"
The big thing that I think that everybody has to realize is, though it looks like it, the insurance companies aren't making a ton of money yet.
Right.
You think they are because your insurance has doubled, but they're still not making a ton of money yet. So what I tell clients is it's a beauty contest. You got to make yourself look the best you can with what you got.
For the product that's going to get insured.
Exactly.
Right. So they'll ask me, is it for rising costs, or was it climate change? Is it, the natural disasters? I mean, is it the reinsurers? Kind of give some background on how that makes sense. Some people don't really understand how the insurance industry works, so to speak.
Because the short answer to that is yes.
Okay.
It's all those. And, I first saw it starting, I'm going to say 20 years ago, maybe 25 years ago. And it started with lenders. And lenders started to require all types of different insurance. They wanted the loss of rents to be 24 months instead of 12. They want the deductible couldn't be more than $1,000 or.
So it's the lenders pushing kind of the requirements in.
Right. And, I'm sure that made, when they tried to sell the loans, that made it look better that, hey, buy these loans and the insurance, all these loans match this qualification for insurance. And the investors were saying, well, that's great, that type of thing. And coupled with that, there was a period where there was insurance companies, they wanted the business, so there was kind of claims forgiveness. they didn't mind if you turned in a bunch of claims, small claims, as long as they made money at the end of the year.
Okay.
Or if they made money over a 5-year period. There's a lot more loyalty back then from both the owners and the insurance companies. Yeah,
right.
They were kind of loyal to each other. Both those have gone away. But so they didn't really ding you for claims. And then the owners started kind of mirroring what the lenders did, and they started using insurance to guarantee they were going to get money every month. If they had, say a little bit of water damage in the bathroom, they have a $500 deductible or $1,000 deductible.
They're making the claim,
and it's $1,500. They're making the claim for $1,000, $500. They just did. So that guaranteed that they were going to get a check at the end of the month,
right?
Because they had no other costs. So that happened, and I kind of attribute that to kind of, speaking of the mortgage meltdown, that kind of happened because everybody bought insurance on all the subprime loans. Well, there isn't enough insurance for subprime loans.
Subprime, yeah.
It just wasn't going to work, and it just blew up in their face. And the same thing kind of happened here, that they decided, what happened, I guess, should say, is COVID gave everything a pause. Everybody they were able to pause with COVID. You had PPE money coming in. You had all these other things. I mean, everyone was able to pause and just take a look, because before that, everyone was just moving.
So was that? Would you think COVID has kind of gave the insurance carriers the kind of the time to kind of look and say, is this a viable? Do we want to stay in this line?
Yes, it was like, hey, we're not making money on this.
Right.
Like the dishwasher didn't like washing, having 5 jobs and washing dishes, and people looked at everything all through their life, and they decided, well, you and I were not wearing ties.
Right.
I
tell people COVID, from our standpoint, there were decisions that we knew people were going to have to make and COVID fast tracked all these so we had
it just did it.
Exactly.
It gave you a chance to do it.
Right. To sit back and kind of reflect. So, or, looking forward.
Right. And so that happened. And so then basically, one carrier started, and then everybody else followed. And they just started coming up with all these different requirements or just getting out completely.
Getting out of the market completely.
Right. And it wasn't just habitational they got out of. They got out of a lot of different areas as well, but habitational was a major one they got out of because it's such a big market.
Right. And some people always ask me, we don't have huge environmental, issues in terms of, we don't have hurricanes, we don't have this and that. Are we, does Oregon and Portland get looped into like California, or is it just, like you said, if a carrier is getting out of multifamily, they're getting out of multifamily?
Yeah. Oregon was always, and still is, was always like a safe haven.
Oh, okay.
Because we don't have any of those things.
Right.
Then the wildfires happened. And so we did have kind of some stuff, but it wasn't necessarily Portland in and of itself.
Yeah, Southern Oregon.
It was Oregon as a state, but it wasn't really Portland. But we still got a little bad rap from that. Politically, everything that was going on downtown. If you're an investor or an insurance company in New York, you thought all of Portland was burning down.
Right. Which again, they're then looking at it like, are we going to see claims? Are we going to see?
Right. And it started. There are a lot of companies that completely pulled out of it. If you're an address in the city of Portland,
they wouldn't do it.
They wouldn't do it.
Or do you see them? Well, it's hard to say. I mean, are they coming back after that, or is it still? But now we're leery on multifamily, so we're not. It doesn't really matter where you are. We're slowly trying to get out of that.
They're coming back, but another thing, they're coming back, but in certain areas.
Okay.
So instead of the whole city of Portland being on fire, they realize it's this zip code, this zip code, this zip code.
Which again, we don't have a lot of housing right downtown.
No.
I mean, where the core was, but
no.
And then a lot of people are asking in terms of, the construction and the year,
Mm-hmm.
how are they looking now, or how are they segmenting the market in terms of, your build construction type from an insurance standpoint?
From what they're looking at, and it kind of goes back to a disaster type of a situation. They don't want to write a huge check.
Okay.
So the wood frame is the majority of housing out here is wood frame.
Right. Right.
But you go back east, it's brick. You go to south, it's brick.
Right.
So they think that they're afraid of wood frame because when it starts burning, it doesn't stop.
Okay.
So what happened was they started to be afraid of, hey, what's my loss limit on this? If this apartment complex burns down and it's 10 buildings of duplexes, I'm going to lose maybe one or two. But if it's 12
garden
plex,
style,
yeah, if it's a 12 plex,
Right.
4 12 plexes, I could lose 12. And so they got afraid of the large values of the frame without it being sprinklered. And we really haven't sprinklered anything until the 2000s.
Right. So we've got a lot of construction, 90s, wood
Right.
frame, what we call garden style
Yes.
apartments that
Yep.
are, that's just a construction type we have here because wood's naturally available. But
Right.
now the downside of that is what the insurance risk looks at it.
And the buildings we started building were bigger. We weren't building 4 plexes. We were building
bigger.
12, 8, that type of deal. Because it was cheaper to build.
No, that's a good point. With the costs going up of where they are, and we all
Yeah.
hope maybe, we've seen the rise, and we just had somebody else talking about the rise in expenses across the board. It's not
Yeah.
just insurance, but that's a big one. And that maybe we'll see more steadily. I don't think it's going to go down, but maybe it just flattens out a little bit. Are lenders looking at changing the requirement? Are they open to, are you seeing, higher deductibles or changing kind of the way the insurance is written? I mean, I had somebody ask me on a core project, older one, maybe I don't insure the replacement value. Because, it's a 50 unit in the core, it's going to cost, more than what the building's valued to replace it. Are there options like that for people, or how do you?
I haven't, it's spotty what the
Okay.
lenders are doing.
Okay.
Some, in some good ways, a lot of the loans on multifamily are short term.
Right.
We're not talking, you've got 20 more years.
Yeah, they're
left
not a
on the
30-year
loan.
fully annual.
Right,
Yeah,
right.
right.
So that is a plus as far as that goes. But those ones that are already there, they're holding fairly firm on
Okay.
you signed on to this and this is what you got to do.
So then the borrower has to go and match.
And they have to do it.
Right.
The new ones, the only thing I've really seen so far is the deductible. They're okay with $25,000 deductibles. I haven't seen very many 50, but I've seen 25. Whereas it used to be 5, you had to get 10 people to sign off.
To go with a higher deductible.
Yeah.
Yeah. Because
but
now there's not the, claim, quote, forgiveness. I mean,
Yeah.
you're advising don't make that claim.
don't make the
'cause
claim. Yeah.
we just don't have lot of options for where you're going to go for insurance. So,
Right.
Yeah.
And I'm not sure how it works when they're underwriting it. Maybe the owner has to have or the borrower has to have a little, more robust balance sheet.
They
because-
are now. That's a big change since
Yeah.
since 08.
Because they're going to
09.
have to write a $25,000 check
Right.
if there's a fire.
So I think getting into it now, I think lenders are looking at it. They want to see more liquidity from the borrower. So maybe they can offset that with there's not a risk that I'm not going to be able to make this, not hit the deductible or something like that when it used to be a $5,000 or $1,000.
Right. And that's what the lenders were trying to push everything down on insurance so that they could make the loan.
Right.
And it didn't work out.
So one thing that you've talked about before is water damage, and I'm not talking rain. I'm talking like
Right.
plumbing and things like that. How's that changing from where we were years ago? Is it limits on that, or pipe breaks? What are you seeing in the industry from that?
They're going after it in a threefold. One, they're raising deductibles
On that,
on water.
okay,
And the companies that can, not all companies have the ability to have a different deductible for a different type of loss. So
okay,
a fire is the same as a water damage, is the same as windstorm. It's all the same. The ones that have the ability to do that are changing the deductible.
So
for
you'll have a
water.
different deductible based on what the event is.
Right.
Okay.
Now, Oregon, because we're not a big wind state, they never. That's the only thing they used to worry about was wind.
High winds.
And you're in Texas, you're in Florida, your wind deductible is different than your fire deductible.
Okay.
And it's been that way for 50 years. But Oregon never had another issue, so they never had that
Got it.
situation. So now that they have the water, I think we're going to see more water damage claims. Deductibles, I mean.
So the deductible will be higher for water damage
than fire or wind.
Okay.
Because Oregon, still really doesn't have a wind issue. We have a storm and a tree falls down, but it's not an issue like the whole town is gone because a tornado came through.
Right. Okay.
Yeah. And so they're doing that. They're lowering the limit that they will pay. They'll sublimit. Okay, water damage will pay up to $50,000 or up to $25,000.
Got it. So they're limiting their exposure for that type of loss.
Yeah.
Right.
And I still don't know why water damage is so expensive to remediate, but it is just unbelievably expensive.
Well, I mean, we just had a manager in here talking. It's the cost of materials, the cost of labor have all gone up substantially. So we'll talk to a lot of owners and they'll say, I used to turn my unit for this dollar amount. Well, heck, you can only, that only pays for the cost of flooring now.
Right.
So just the whole ramp up on that cost is again affecting the insurance side. So for a water damage on 2 units may have cost X, but now it's 2 times that.
Right.
And I'm sure from the insurance they're like, we've got to figure out a way to limit this.
Yeah. And that's another, you mentioned the cost going up for the materials. That's another thing that has really hit the pricing of insurance so much, because all the actuarials, and they came in, they said, okay, charge, just to pick a number, a 20-cent rate for property to fix things. Okay. The 20-cent property rate may be correct, but what isn't is the rate or the value that they're using for that 20%. So they say, well, it's going to be $200 a square foot to replace this thing. We'll do 20%, or we'll do a 20-cent rate. It's $4,000 a year. Well, it costs $250.
So they're off on the initial anyway.
They're off 20%.
Right.
On just to start with. So that's another thing that has really pushed up the rates, is that they're raising the value. So, and they always go too high. Instead of $250, they want you to be at $275.
Well, they're trying to cover it for the future.
Yeah, they
don't want to get in the same position they were before.
No, same sort of thing. And then the same with the loss of rents. It used to be, hey, you can fix this unit. It'll be out 2 weeks. We'll owe a half a month's loss of rents. Well, now it's like 2 months.
Right.
So they're in the same boat. They're behind. Everything they did, they were behind on.
Got it. So now they got to adjust for that.
They do.
So when you've got clients, coming in, I mean, what's your take on where we're going to be in the next? Do you see some new insurers coming into the market for this, or what's? I mean,
I've seen a little bit of a. I've seen there's a few people that are starting to come in on the insurance, and they're coming in on what I consider the tier 1 group, the 2000 and newer sprinkler,
nicer
brand new
complexes. Right. Okay.
Some of the ones that have been in are now opening up to where maybe they'll start looking at the older buildings again. They're not doing it cheap though.
Okay.
It's going to be expensive, but it's at least you're going to get decent coverage. You're not going to get Lloyd's of London where you really have to look at the policy to make
sure you got coverage.
Yeah, or know beforehand, I don't have it. If this happens, this is all on me.
Yikes. Well, thank you, Chris, for taking the time to come speak to her. I mean, like I said, as I told people last year, I thought insurance would be the big topic for 24.
Yeah.
Just because you and I talked, I think, before, and you could see it coming.
Yes. With
some carriers pulling out and things like that. You're like, hey, this is, and as we talked about, as they start recognizing the expenses and things like that, it's gonna come in the rates. So
100%, especially when it never did before.
Yeah.
Because it was just it was a cash money.
Right. So it wasn't an issue. So, and as we've told owners, talk to your insurance agent. Don't wait till the thing's due
No.
for renewal. You've got to get on this early because,
do.
again, this is not like it was before. There's less carriers, less options, more in-depth discussing of what the policy is, and if you've got a lender, you may have to get them involved as well. So,
Well, and also the thing I always tell I tell all my my insureds is when if you have money to spend on your property, it's really hard to do this, but you're gonna have to do it on the stuff you don't see. You're gonna have to do it on the electrical. You're gonna have to do it on new pipes.
because that's what
You're
insurance
gonna
wants.
that's what they want to know. They don't care if you just paint it. I have so many people that say, "Oh, I put $500,000 into my property. You know, I got new windows, I got new siding, I have fancy plants now."
But there's nothing behind the walls.
None of those things insurance covers.
Yeah.
And so then they go, "Well, did you do the plumbing?" Well, no.
Yeah.
So
That's yes.
it's the hard thing to do, but it's the stuff you don't see.
Right. Well, thank you again for coming, sharing with the audience, and we'll see you again on HFO TV.
Our entire office specializes in multifamily real estate, making HFO the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Build your legacy with HFO. Call 503-241-5541 or visit our website at hfore.com for more information.